Hey guys, happy Monday, happy Labor Day. I hope you have the day off, you're doing something fun. Hopefully you're not watching this video today because that means you're not doing something fun. Just kidding. But I am clearly working today. I'm kind of taking the day easy a little bit, but definitely getting some work done. And I can't miss giving you guys your update on Monday. So here we are. If this is your first time to my channel, welcome. Thank you for finding me. I am a realtor here in Phoenix. My name is Caitlin McKegg, and I do updates on Mondays about what's going on in the Phoenix real estate market. And largely the information that I share comes from the Cromford report, which I am a subscriber to. They analyze data in the MLS for Phoenix specifically and provide that to their realtor subscribers so that we can share with our clients. And I come here every Monday to share insights from that with all of you. So thank you for supporting my channel and watching these videos. But let's jump in. Let's talk about some stuff. So the hot topic that I want to talk about is this iBuyer activity. The last few weeks I've been talking about investor purchases and investor activity, and included in that is iBuyers. And today I have a little bit more info to share about that and just kind of a question overall, because this is becoming a big part of our demand right now, and kind of curious how this is going to affect the market. So first of all, what is an iBuyer? If you're not familiar, it stands for internet buyer. It is a company such as OfferPad, Opendoor, Zillow also does this. I think there may be a few more, but those are kind of the main big ones. That purchase homes from homeowners cash, and then they will typically rehab them slightly and then relist them and sell them to the public. So a lot of times their inventory doesn't really affect our overall count because they, buy a listing and then they relist it. So it kind of evens out, but they've been buying a lot lately, and it's certainly affecting our market in the sense that the demand that we're seeing, so what if it's false demand? I mean, a lot of the demand that we have right now is because of all of these iBuyer purchases. So let me give you some numbers here, and I'm reading from the Cromford report. So I'm going to be looking at my computer for a moment. So to put this into context, iBuyers have purchased about 2,850 homes over the last 3 months. And that represents almost 9% of resale purchases. If we compare that to, I think they didn't state here, but I think they're comparing to either last year at this time or maybe earlier this year. But in the same time frame, it was normal for them to purchase less than 1,000 homes, which is about 3% of resale homes in that same time period. So, 9% is a pretty big chunk compared to they used to hang around the 3% range. So that's really increased a lot. They estimate that if iBuyers had not purchased this much, our supply would be higher in Phoenix by about 1,800 listings. So that's pretty significant. If you've been watching my videos, you know I talk about the Cromford Market Index, and we'll get into that in a second. But if we have 1,800 more listings in our market, again, put it in context, we're somewhere around like 6,500 or so listings throughout Phoenix, and normal around this time is about 25,000. So I've talked about how severely low we've been in supply. But, if we're only sitting at 6,500, 1,800 is a huge chunk. 1,800 would make a pretty big difference in the number of homes on the market that could be purchased. So if we would have had 1,800 new listings or more listings in the last 3 months, that would affect the market index for sure. Like, that would put our market index lower than what it is sitting at today, because we would have had more supply to account for. So it's really interesting to think about how this much iBuyer activity, this many purchases, is actually affecting these stats that we look at and our feel for the market, because if 3% of these resale homes are all iBuyers, you know, are we really considering that demand? They're kind of distorting the numbers a little bit. So it's pretty interesting to see this. The other thing too is they're not buying these homes for cheap either. Like, they are being very competitive. They are certainly, you know, making offers that are higher than what you would think an investor would purchase for. So that in effect is increasing prices as well. So their activity is definitely making it look like there's more demand than maybe there really is. And they are also increasing the prices of homes being sold because they're pushing those prices up. So I don't know what to say about it. It's pretty interesting times to see that and see that much activity. And I don't know if their plans are to continue this much or if they're trying to buy up a bunch, you know, by a certain deadline. I have no idea. But that's definitely something that's going on and affecting the number of supply that we have in the market, and then of course what our demand looks like compared to, you know, what chunk of that demand is actually owner occupied demand here in Phoenix. So food for thought. Let's move on. Let's talk about the CMI, and I'll tell you where we're at. And it hasn't changed much from last week to this week. Last week we were at like 347, I think, and today we're at 346.6. So it's definitely going down slower. Again, based on all the information I just shared with you, that clearly has an effect on what's going on with the CMI, I think. So sitting at 346.6, just if this is new information to you, the CMI is the Cromford Market Index, which is an algorithm that Cromford Report has created to help us understand supply and demand in the market. And a reading above 110 means we're in a seller's market. So, you know, even if this is off by a little bit, it doesn't change the fact that we're still in a seller's market, pretty far into one at 346.6. For our demand index, so that has been going up week after week after week. If you've been following me on a weekly basis, I've been seeing that and stating how that's been increasing. We're sitting at 111.9. Now we know maybe it's not quite that high if we're really trying to find the true owner-occupant demand out there. But 111.9 is the reading that we're at today. Last week, I think, was 110. And then our supply is sitting at 32.3. That has gone up, and it was going up a lot faster than it is more recently. It kind of slowed down in terms of numbers of homes coming on the market and how quickly they were coming on the market. Now, again, we know maybe a lot of that is because of this iBuyers demand just swooping everything up, but either way, supply is increased. It's just increasing much slower than it was before. So that's where we're at on this Labor Day. I hope that's interesting information for you. It certainly was for me. We're going to have to keep an eye on this and see how things change. I definitely think it's a good thing that we are kind of raising that flag and noting that a lot of this demand may not be owner-occupant demand, and kind of be cautious in how this shakes out because it is distorting a little bit of the numbers. I think that's a pretty significant amount of purchases by these companies. So anyway, enjoy the rest of your Labor Day if you're watching this on Labor Day. If not, good for you because you were doing something fun and you weren't on YouTube on your day off. And if you have any questions, you can always reach out to me, call, text, or email, or click the link in the description below to set up a time to chat. I will be back on Friday. I'm going to have a new Tales from the Trenches episode sharing a listing experience on the seller side. So make sure you stay tuned for that. Have a great day, everyone.